So yeah, I shared with you guys in the chat this break and retest strategy that I'm going to be going over with you guys today. It's actually a strategy that Matt, John Wicks from FX Replay, shared with me about a month ago or so. He came across. Tony Rockhall is another pretty predominant YouTuber that has a lot of different forex insights and strategies. So going to be going over his kind of video he had on this simple kind of break and retest strategy, so you guys can kind of follow along, and then I'll go over the kind of documentation, and then we'll dive into the backtest. So feel free to at any point to reach out with questions. What's up, Manny? Good to see a lot of you guys again. Feel free to reach out with any questions at any point, and I'll try and answer them as best as I can. So overall today we're going to be doing backtest on the euro during both London and New York sessions. During the video he didn't specifically say only trade this strategy during this specific session, but a couple examples he took were kind of during London/New York time, so we'll just kind of trade both sessions. He does also show in some of his videos these other forex pairs that he trades, so you could potentially use this strategy on those as well. We're going to focus on the euro today specifically. And yeah, so to start the strategy, in general, a lot of his stuff is really just based on price structure and kind of price action within that. So there's kind of three first things with this strategy that you need to identify. The first one being a clear trend, and that's simply in an uptrend, obviously clear kind of higher highs and higher lows, and you want to see kind of a structure highs being broken. If there's a retest of those levels, then you see continuation. So you want to be able to see clear trends as well as a clean price action. So you really want to be able to see the clear kind of highs and lows. You don't want to see a whole lot of kind of choppier price action. If it's choppier or ranging, obviously if there's no clear trend based on this kind of structure, either uptrend or downtrend, he said it's best not to trade during those times. So you want to be able to see the trend and see clean price action. And then this key level, I'll kind of make these a little smaller so this fits in the same page. The key levels for his examples weren't always like completely the same, but to try and make things as mechanical as possible today, what he mostly used was basically in an uptrend, he would kind of use the range between the wick high and the body high of these kind of structure highs here before you got a break and then a retest. So he would use this kind of entire rectangle zone that I've highlighted here for kind of the key level for uptrend, and then you're looking for kind of entries on the retests of that, and then vice versa for downtrend. It would be basically the kind of zone here, including the wick and body lows of the structure low before you see a break of structure and then a retest for a short. So we'll kind of use that as our kind of guidelines for the key level, and obviously it's not a specific line. Most of you guys know at this point supports and resistances are usually more zones than specific levels. And then specifically for his entry models, there's a couple kind of candle patterns that he looks for, and I apologize, he does use like the same color candles for a lot of his videos, so apologize if this is a little confusing. I'll try and show you examples in TradingView with the red and green candles after this. But there's kind of two candle patterns that he looks for when price is coming back into that key level for a retest. The first of which is an indecision candle followed by bullish continuation. And so what I mean by indecision candle is usually what you will call a doji, and it's generally like a smaller bodied candle with either wicks on both sides or kind of wicks rejecting against the key level. And then the bullish continuation candle is really just a strong candle kind of moving away from that key level for a sign that there's likely continuation happening. It doesn't have to be an engulfing candle, different color or anything like that. Just he wants to see kind of a doji or indecision candle followed by a strong kind of candle move to the other side. So this is the first pattern he will look for. The second one is what he calls a multiple wick rejection. So instead of seeing kind of a strong candle move against it, he'll basically say, okay, if there's multiple attempts to kind of get back, in this case below this key level, and the buyers keep buying it up, so you're getting these wicks essentially rejecting, sellers' attempts to get back into this level, he will say that this is also kind of bullish evidence that price is going to continue to the upside. So we'll be using these two potential candle formations for our entries, and I'll show you guys a couple examples real quick. So I believe this one was the double wick confirmation. So you can see here After price had been kind of ranging for a number of, days, we had a price structure shift here where we got some nice kind of lows and subsequent lower lows for kind of clear bearish market structure. And I've marked out this kind of key level here on the chart. It's a little hard to see here because the rectangle is the same line, but basically I included this wick low all the way up to the body. That's kind of the key level that I've highlighted. And essentially what we're looking for, I guess let me go back just one quick. There is one last piece for this. In addition to the retests and the specific candle structure, he'd mentioned that you don't want to take the first retest. I guess I don't know if this is specific to forex or just what he's found to work best for this strategy, but he generally will say like the first retest is evidence, and the second retest, kind of providing the same candle pattern, is confirmation. And so a lot of times he shows some examples where if you take the first retest, you'll get stopped out and then it'll run. So he said wait for the second one, and obviously there's going to be cases where we're going to miss some trades because of this, but hopefully it'll improve our win rate by kind of waiting for that second retest for trades moving in our favor. So going back to the example here, we had a nice kind of break of structure here, close below this, and then we had one retest of the level that came back down, and a second retest that kind of took a while to develop. And this is why I think he waits for the specific candle structure, because you don't want to just enter randomly. But we saw here these kind of last two candles, kind of a multiple wick rejection. So pretty large sell wicks on these two candles, showing that any attempts to kind of get back above, we barely swept this high and it was immediately rejected. So basically showing that there's potential evidence for continuation. And since this is now the second time we've retested this level, basically the entry for these wick retests is going to be after the second candle, after the second wick kind of rejection. You'll do a market entry after that candle. And again, he didn't really go super specific with the stop loss, so for today, to try and make things mechanical, I'm just going to use the kind of wick high and low of the retest. And then it's obviously a market entry, and then he was pretty clear. He always did like a 3-to-1 risk to reward, so that's what we'll be going for today. No trade management or anything like that. And so this is like kind of the first example of a wick retest, and I think I ordered them differently in the chart. So this is an entry trigger number 2 for the example, and then let me show you the other one. I believe is over here. All right. So this example took it a little bit longer, but you can see here we had pretty clear price structure of price making lower lows and lower highs, and then I highlighted this key level right here. Again, kind of it's a little hard to see, but kind of the wick low and the body low of this kind of structural low before we got a break to the downside. And then as you'll notice, we got an initial retest that for this strategy I wouldn't be interested in, but I would be waiting for this second retest. And the second potential trigger is, like we saw before, an indecision candle followed by, in this case, bearish continuation. And so we saw here, it's probably not the best candle, and honestly you could kind of, it's a little subjective. You could potentially have just waited for another wick candle a little bit further on, but we did see a nice engulfing candle after this kind of, I guess, medium bodied candle here. And so you would basically do a market entry after the kind of strong candle away, and you, again, for today I'm just going to use the wick high of the kind of second retest in this case in target 3R. So here's another example, and these trades are going to take a while. We are on the hourly time frame, so it's definitely going to take a while for these to play out, but let me know if there's any questions in the chats. But the kind of last thing I wanted to go over in the documentation, of course, are optimization considerations. So if this is a strategy that you guys want to backtest, maybe after you get a decent sample size, you could backtest. You could try to optimize things like, should the stop loss be the wicks versus the bodies, or maybe we could just put it like just on the other side of the key level. Maybe that works out a little bit better. Maybe sometimes it barely gets past the wick and goes down, so maybe you could also just do like a few pips past the retest. You can kind of play around with a few different things for the stop loss to try and optimize with that. You could also potentially optimize your take profits. Is 3R kind of the best thing to go for, or do you want to try and do a trailing stop? anything like that is a good trim, do partial trims at any point. So a lot of different considerations you could look into when you're backtesting to optimize. And I have a video a little while ago on how to optimize your strategies if you guys want to check that out. So yeah, let's dive into the backtest. So I've got a session here created just to kind of do a little housekeeping first. I've got, and I'll move this out of the way so you guys can see. All right. So Euro USD 1 hour time frame. The only indicator I really need for this is my session indicator. So I have it to show basically I've got my time zone set to London. So I'm basically going to be starting at London Open, which is 8 a.m. and going till New York close. And again, this isn't necessarily something that you guys would be trading, both sessions, but I think if this is a good example, like if you have a strategy and you are in a time zone where you can trade multiple sessions, one thing that I recommend to people is backtest both sessions and kind of get the data to see which is better. If one is very much better than the other, then maybe just stick to that one. Or obviously if it is bad for your sleep schedule to get up super early or stay up super late for a session, then just trade the one that works better for your schedule. But so yeah, for today we'll be kind of trading both of these, and yeah, let's dive into it. I haven't done any prep work on this, so I'm going to be looking at this kind of fresh for the first time. But I guess the first thing I'm seeing here is a pretty clear downtrend. So we've got a series here of kind of lower lows and lower highs, and so I'll kind of identify that we're looking for shorts, and kind of a couple key levels here. We had, I guess, kind of one right here. This kind of, so the right here and this kind of low we had right here, I'm identifying the wick and the body lows, marking out kind of a key level on this chart, and we have had, I guess, kind of our first retest already. So I'm gonna fast forward kind of 1 hour at a time and take a look to see if we get any subsequent retest with our potential candle patterns. So after London opens, unfortunately we actually I might have missed another key level here. So I think when you're doing this strategy, obviously there's going to be a lot of different key levels as price continues to the downside. So yeah, I think this was actually a potential trade that we could have taken if I mark out this subsequent key level. So we had one low here, and then we made a lower low here. So we had kind of two key levels that we could look for. And yeah, I do think this is potentially a double wick retest that we probably would have taken. So let me come back here and make sure I can record this trade. Yes, proceed. All right. So we've got our level. We are now about to be in London Open. So we've had basically one retest. It came all the way down here. So if you kind of follow the candles, and if you think about the lower time frames, we had a nice break of structure. We came up and retested it this first time. Then this red candle came all the way back down here. And then this is kind of our second retest that we have right here. So starting with this 8 o'clock London time candle, this is where I'm like considering my second retest, just based on the price structure. And then this following candle, we got a nice, both kind of a wick rejection and actually a pretty strong candle. So I would say this definitely is kind of valid for our setup. I'm going to use the kind of wick high of that second retest, and I'm just going to do a fixed 3R. This would be a pretty big move, but we'll kind of place the order here. I generally like to do 1% of initial balance for all my trades, just to kind of keep things standardized across all my back tests. Not going to be doing any sort of trade management. The only thing I'm going to add is I'm going to go ahead and use entry trigger 1 for these. I guess I'll use, this is kind of both. So I think technically I'll probably use the multiple wick rejections, because this first candle was actually pretty large. So right here, like if this candle had a smaller body with a wick, then I would probably use the entry trigger number 1 with the kind of indecision candle and reversal. But so I'll be using tags to identify those two triggers as well. And then yeah, we'll just let it play out and see kind of what the result is. So I could probably slow that down a little bit. But yeah, pretty quick move to TP for this one. And yeah, that's probably the only trade for this day. We're already pretty much at the end of the session. Go to next session. All right, so we are still in a downtrend in general. We've kind of ranged overnight, which often happens I guess if I needed to mark out another potential key level, we do have one kind of up here that we could look for. It's pretty small, so let me just kind of draw this out in case we are interested in it. The only thing that I see that I might not want to take a short if I get back up here is, you know, if we come all the way up here, we would potentially be in an uptrend at that point, because we would be making a higher high here and potentially putting in higher highs and higher lows. So I'll just kind of see, I'll mark it out and then kind of see what price looks like by the time we potentially get there. Otherwise, we may continue lower and be just looking for key level off kind of these local lows. So I'll go ahead and mark this out. Zoom in so I can make these big enough. So we've got another local low here. That price has now closed down below. So we're going to see if we get our two retests. So we got one retest there. That was right on news. So some PMI. Again, not interested in the first retest for this strategy. Let's see if we get a second one so that we can look for our two price structures. I think we're already at the end of New York session, so just wouldn't be any trades this day. Trading the hourly time frame, you've only got, I guess, you know, a dozen or so hours between the two sessions. So there wasn't a second retest on this day. Let's go to the next day and see if there is the next day. Great. So pretty much at London Open, we have our second retest, and we've gotten one wick rejection already. Let's see how this next hourly candle closed. Okay, so I think this is another great example for why he likes to wait for the candle patterns, because if you just trade the level expecting it to give you the reaction, then trades like this will just you know, kind of take you out pretty quickly. So I would say as of right now, we have pretty, you know, confidently shifted market structure. Instead of, you know, lower lows and lower highs, we now have higher lows and higher highs. So I'm going to be looking for longs, and this key level right here, I can honestly probably just keep it as it was unless I see a clear kind of structural change. So we got one retest there. So this honestly might be our double wick, but it's the first retest. I gotta remember that. So we have had kind of two wicks rejecting into this kind of previous high, but it's only the first retest, so we won't take the trade on that first one. And let's see if we get back into it the next day. I don't think we will in this New York session. So we had the right idea. We were now looking for longs, and the first time it did give a reaction, but we didn't get a second test to this level, so I just wouldn't have a trade this day. And now price is flipping to the downside. So this could potentially be a sign that maybe just wait for a little clearer structure, because we've been kind of flipping bullish and bearish. I guess on the local time frames, we now do have pretty clear down bearish price structure. So if we're just solely going off price action for these kind of levels like he shows in this video, then this could potentially be a short we would look for. But if you do some more backtesting, I think another thing that I might consider as like an invalidation is like if price has switched directions for trends like within the last few days, maybe don't take the trade, or maybe size down a little, like maybe take less risk. That could be a consideration. But let's see if we get a valid I guess couple retests in here. So pretty much just swept these lows and went to the upside. So yeah, I would honestly say this is a pretty good example of what you would call like a ranging environment. So after this low was made, you kind of swept these highs and bounced around for a bit, swept these lows. So I think this is a very good example of the ranging environment that he would say not to trade. And so let's go ahead and see, I guess, kind of when we break out of this range might be a good time to start looking for trades again. So go to next session. Still kind of chopping around in this range. I'll play it forward a little bit. Alright, so maybe the next day we will be able to start taking some trades. Nope, we're still kind of chopping around in this range. I want to see like a clear kind of break to the upside, or, you know, clear break to the downside, because right now we're just pretty much chopping around. Alright, so we do have pretty clear bearish price structure here again. Let me see if there's any key levels I can identify. Looking at this kind of pivot low here, we've got a pretty small range. kind of between this wick low and body lows right here, that we've had one retest so far and then went lower. And let's see if we get a second retest. I don't think we will this day. Oh, let's go to next session. It came close but didn't quite retest it. Alright, so here's a potential second retest. And we have 2 wick rejections. Let's go ahead and try this trade. It is still within this ranging environment, so again, this might be a lower probability trade than in kind of the more clear trending environment, but we'll go ahead and record it because we do have, at least from this high, a pretty clear downtrend, and we've had our second retest, so everything else lines up. So I'm going to do a market entry at this candle close. We'll just use the wick high as our stop loss, and the 3 R's here is actually not going to be that big of a move. Right about to there, so place the order. Oops, gotta make sure I've got it selected. Place the order, 1% of initial balance, market entry, and this is our multiple wicks, so entry trigger number 2. And let's see how this one will play out. Alright, barely got stopped out before it went to our TP. These trades suck. So the only thing I can see here is this could be a good example where either one, using a stop loss just a few pips further than the wick high could have helped you out, but you also wouldn't have quite hit 3R in this case either. So kind of 2 potential considerations with this trade, both on potentially adjusting the stop loss and also maybe after the trade gets up, 2R or something, you want to go break even at that point. A couple options, but again, this is just a single trade. So you would want to, if this continues to happen on a larger sample size, then maybe those adjustments are worth looking into. But yeah, we are now trying to break out of this range. Let's see if we can finally kind of break out of this range that we've been in for a little bit. Alright, we are now pretty much out of the range. We technically do still have kind of this high here that might put us right back into it, but as of right now, we do have bullish price structure that we've been kind of coming up. I guess this is like close enough. We've got a recent high here. So our most recent low is kind of this wick here, which lines up with the previous range high, so it could have kind of extra confluence there. So let's see if we get a couple retests of this level for long. So there's kind of our first retest. Oh wow. So FOMC or CPI, yeah, CPI. So big news that obviously, news sometimes just, there's technical analysis out the window. So again, could have been a good first long. We did get a nice reaction, but based on his strategy, he wants to wait for the second retest, so we just wouldn't have taken this trade, and probably not going to have anything. And technically you have now bearish price structure, but since we're just kind of continuing in this ranging price, I'm just gonna go forward a little bit until we clearly get out of this ranging environments. We're still kind of within this range low, so this is and I think like one thing that could be helpful with this strategy, because only the 1 hour time frame, is once you get comfortable with it, maybe you can look at 2 or 3 pairs for this same strategy, and maybe if you identify, man, like the euro is just ranging, but maybe you identify one of the other pairs that he trades that is ranging, and maybe you can kind of look to trade those instead of just kind of having nothing to do when price is in these ranging environments. So alright, we have officially, hopefully, broken down to this range, and hopefully we can now look for shorts, because we have clear bearish market structure of lows here, higher lows, lower lows. So we've got, I guess, key level number 1. We've got this kind of low here, the wick to the body, that we could potentially use. That's been retested once, so this could potentially be an area I'm looking to short off of. And let's see if we get a price reaction like we like. So we got one wick rejection, but the second candle was pretty strong bullish, so I wouldn't be shorting yet. Again, we have kind of one wick rejection, but not really like the second candle, like for the confirmation, isn't really there for me. So let's see if we get kind of either the indecision candle. Okay, I would probably say this is good enough for our kind of our indecision candle followed by a strong move to the downside. So we had a pretty small bodied candle followed by a move to the downside. So I'll go ahead and try this as a short here, using the kind of highs from our retests, and we'll target 3R right about here. There is a chance that we just sweep this lows and come back to the upside, but assuming that the structure is holding and now we've kind of clearly broken down from this range, let's give this one a shot. And I don't have it quite at 3R. I'll fix that. There you go. So place the order, 1% of initial balance, and this is our entry trigger number 1. So we'll save that, and let's see how this one plays out. Alright, we had a loss. So again, kind of right after you saw an indecision candle against our trade direction. So that's, you know, probably a big reason why price reversed back to the upside. We had a loss. So most strategies are going to have losses, so I'm not worried about that, but let's try and get a little more sample size and see kind of where things go from here. So in general, like, I think it can be frustrating when there's, you know, this is like a week when you only really took one trade with this strategy, but no trades are better than a bunch of losses. So that's just something to keep in mind, that even if you have a strategy that's not giving you a lot of triggers, a couple things to do are, number one, potentially test it on multiple pairs, so that maybe if there's only 1 or 2 trades a week with one pair, maybe if you watch 2 or 3 with the same strategy, you can get, you know, enough trades during the week that you're not sitting on your hands the whole time. But also, secondly, just like psychologically, tell yourself that you know, missing bad trades is not a bad thing. So it's just more of just respecting the market environment, and if this is a trending strategy, not to trade in ranging markets. But yeah, this could all, again, Manny had another suggestion. This strategy could also work on lower time frames, but we're going to stick with the 1 hour just because that's what he showed during his tests when he was showing it. So we're really flipping back and forth with bearish and bullish market structure, but just going off what we have in front of us currently, we've got a kind of bearish market structure coming into a potential retest here. So I'm going to probably highlight this low, probably just highlight this range here. So kind of this wick low and then the kind of lowest body near it. We've gotten one retest here. We aren't respecting these really much at all. Actually, that was a decent, it came a little bit above it, but ended up kind of going back down. And there's some news here. It's probably a GDP. So let's see if we get a second retest. It's probably not. Actually, whoa, this is a god candle. I don't know what happened here, but yeah, this candle was massive, and it's a huge wick rejection. But obviously not a whole lot we can do with that. So let's see if we get something we can actually trade off of. I don't think we got anything during the session. Yeah, there had to be some kind of news. I actually only have U.S. news. I wonder if I put on, let's change the states. So let me see, where do I have? Oh yeah, filters right here. So I'm going to put Europe here as well. So that's another thing. And again, you can kind of click the economic chart, put past and future events. I usually only stick with high impact. But yep, there was kind of news both of these days. Nothing during this candle. I don't know what happened here. But yeah, now we got news for both of them on the chart. So go to next session. Go to next session. All right. So we are still kind of continuing to the downside. We have made a lower low here now. So potential area right here, kind of the wick low and body lows. If we continue lower and get retests, we did not. We kind of just formed a double bottom here and then went to the upside. So again, still kind of a ranging environment. We did break out of this initial range, but then we formed kind of another one. I guess kind of between this high over here. Just mark this out for you guys. So kind of this high to honestly probably this low. Like, we've kind of been stuck in this range now for a week or so. So I'm going to do what I did before and just kind of play things out until we get out of this range. So hopefully we'll kind of have clearer price structure. So we just kind of claimed back in it. And I think I am going to do a ranging market backtest for you guys in a future week, so you know how to play these a little bit as well. But for trending strategies, you kind of just want to avoid these market conditions. So let's see if we get something now. We do have, we're at the end of this day, so go to the next session. Go to the next session. All right, we're still within it. So I'm gonna play this out and see if we can get below. Okay, so this could potentially be a day that we'd be looking for a trade. Actually, right at London Open, I think there was a trade. So if you look right here, we've got, you know, really big shift to the downside with new lower lows and lower highs. And we had a key level right here, kind of from this wick low to the body that I'll drag out so you can see. And then after this low was made, we had one retest here. That price kind of shifted down, and then we had a second candle right here. So this is actually a trade I'm going to go ahead and record, because you can see here we have our kind of indecision candle, pretty small body candle, followed by a strong move away. So this would be kind of the entry trigger number 1 that I talked to you guys about. And we have kind of hopefully finally shifted away from this range, so we can catch a trend again. So let's go back to this candle. So London opened, and then we got the strong reaction, pretty much the first hour of London. So we'll do a market entry here, just using the wick high of the retest. Let's see if we get 3R out of this one. 3R, place order, 1%. I'll do entry trigger number 1 for this. Save, and let's see how this one plays out. Give us a win. Come on. This is a long trade. It's probably going to be a loss. Alright, that was a painful loss. So at the peak, this one got up 2.25R and then came back as a loss. So again, if one of the really good things, this is something I've told a few guys in the Discord. There's in the analytics this metric called could have profit or break even, and it tells you how many trades went over 1.2R and then came back as a loss. So this would be a good example. You know, it went pretty close to our take profit, but then ended up reverting on us. So if the rule of thumb that I use for that is if you take the percentage of trades that kind of came back on you based on the total trades. So say that you had 100 trade sample size and maybe 30 of the trades, you know, were in that could have profit or break even. That would be like 30% of the trades that kind of came back on you. And so if it's over, what did I say, 20% of the trades, I think is a good rule of thumb, that your take profit's a little too aggressive, or you may want to take advantage of like some break even or trailing stop loss. But if the could have profit or break even is like less than 5%, then you're probably you're leaving a lot on the table. So you might want to look for a more aggressive take profit. And we'll look at this at the end too. You know, obviously not going to have the hugest sample size, but we'll kind of take this into consideration when we look at the analytics. So go to the next day and see kind of where things are at. So at London session here, we are now in an uptrend. So we have kind of, you know, unfortunately, you know, we had to let the trade play out, so wouldn't have taken any trades this day. But it's pretty clear uptrend here. Lower lows, lower highs. I guess technically we did have a slightly lower low here, so I would say this is a good example of maybe not the cleanest price action, because as we saw in the documentation, you want to see really clear lower lows and lower highs versus more kind of choppy stuff. And in this uptrend, we made a lower low here, so it's not as clean as you would like. So because of that, I think I'm not gonna look for longs on this day specifically. Kind of just like overall pretty ranging market. We are overall on a downtrend like since the start of the year, but it's kind of been like 1 or 2 days range for like a couple weeks, down for a little range. So unless you can catch these kind of few days that it's been dropping, there hasn't been sustained trends during this kind of time that we've been backtesting. Let's see. Alright, I think we got one retest. Just about. So we got one retest. Let's see if we get a second one. Come on, give us a trade. Alright, so it's technically not London or New York anymore. So sticking to our rules, this just might be a trade we miss. I'm going to go to the next session and just going to see what would have happened. So yeah, there wouldn't have been a trade based on the rules anyways. But even though this second retest, if there was a proper setup here, technically it would have been outside of the time that we wanted to trade the strategy, so it wouldn't have been a trade we took anyways. So now that we have shifted to the downside, I'm going to kind of move this back to the left. It's no longer relevant. And we have a kind of clear downtrend now. Let's see if we can actually sustain a trend. In general, I think, yeah, like I said, this kind of price action that I've been backtesting has been pretty rangy, and so I think if you find other pairs that are like less range bound, while maybe one of them is, then you could potentially look to trade those more. But let's see if we get a couple retests. We got our first retest here, some huge news that caused a huge candle there, and then we did get a potential rejection, but I want to see if we get a proper candle pattern. Alright, sorry, we're outside of the session now, so we're on the next day. We've gotten, I guess, technically kind of our two retests. This first candle obviously was pretty crazy, but we did reject off of it, and then we came back up and have tested it a second time. So I'm trying to look for that specific candle pattern now. We've got kind of, I guess this is a pretty good wick rejection. The wick and the body are about the same size. Let's see if we get the next one. We didn't on the next candle, so we still don't have that specific candle pattern. Let me see if we can get something more specific. So I would say this classifies as the entry trigger number 1, indecision followed by a big shift to the other side. You can see relatively small bodied candle followed by a strong move to the downside. So definitely not the cleanest example, but I do think it's within the parameters of his strategy, and you know, we've been kind of testing this range. So let's give this one a shot, and then we'll kind of do a little overview. So 3R would be a pretty big move. This may not pan out, but let's give it a shot. Place order. Sorry, I gotta make sure I've got it selected. Place order 1%. This is entry trigger number 1. Save, and let's see how this one plays out. Alright, another loss. So, to be honest, yeah, this is probably going to be it for this session. This is the first strategy that we backtested that is not profitable, and this can be really frustrating if you're backtesting, and not only like we weren't able to get a lot of trades, but you know, also like you might feel like you wasted your time. But something that I've told myself in the past, like, learning what strategies and pairs not to trade is just as valuable as finding the ones that do work, because if you are continuing to kind of beat your head up against the wall trying to trade something that you think might be profitable, until you have the data, like you might just be losing, you know, without realizing like this isn't actually a profitable strategy, or maybe this pair in particular just isn't as good, or you know, maybe there's, you know, to be perfectly honest, like just based on what I've found here, I would say like there are better strategies that you could potentially look at least for this pair in this time frame. Maybe other pairs and other time frames with a similar strategy could work better, but like I would not spend more time testing Euro USD on the 1 hour. Like with this, I would try to maybe test another pair, test some other time frames. Maybe 15-minute works better with this. Because it's really not worth continuing to like optimize a strategy until you actually see a good equity curve. So again, might be frustrating in the moment that you're backtesting, but it's really good data for you to know, like, okay, like this, maybe, you know, I heard this strategy was really good, but after testing it, like it's actually not, and it can give you better information on like what you do want to focus on trading, and everything else. So I got a question from Manny. When testing a strategy, when do you specifically decide to drop it? So generally I'll say after about 20 trades. You should have enough sample size to know if the strategy is actually profitable or not. Like if we, maybe we get a better market conditions the next month or two with the strategy, and it does actually start doing better, and maybe this small sample size was just like, just not the best market conditions, then maybe that would be, reason to continue. But I think like 20 to 30 trades is usually good enough to give you that initial like smell test on like, should I continue? And so I think that's what I put in my backtesting playbook. I did a video for you guys a little while back. That's kind of what I would say is like your first checkpoint is like after 20-30 trades, just kind of check in, see like, okay, do I have a decent equity curve? Am I in profits? And then if so, then great, continue, build that sample size a little bit larger, and then I like to go back and audit, make sure I recorded the trades correctly, and then optimize and stuff. But yeah, if you're seeing a flat or down or super volatile equity curve, you want to see a nice slowly generally increasing equity curve. If you're not seeing that after 20 to 30 trades, then I think it's just a good time for you to realize like, okay, this isn't a pair and strategy that I should be trading. Maybe I can look for something else or try another pair or another time frame. Or again, maybe you have a strategy that works great on one pair, but another pair is just not as good. And instead of just continuing to force it, just realize, okay, I shouldn't trade this on another pair. Like I had that pattern strategy I showed you guys, I think the first session I did, it worked pretty well on gold in the US 30, but S&P was definitely not as good, and so it led to more drawdown if I traded that versus if I would have just left it out. So yeah, sorry that today wasn't as profitable as the others, but hopefully it was still a good lesson to show that number one, like there are obviously a lot of ways to trade and not all of them are going to be profitable, but also it's still beneficial to spend time backtesting even if you don't get the best results out the gates. And yeah, hopefully this is helpful for you guys, and please continue to give feedback in the feedback form. I'll drop it again, the link for the YouTube as well. If you guys have any other strategies you want me to test, I'm happy to learn them and check them, or if there's strategies we've gone over and you want to see how they work on different pairs, different time frames, I'm happy to do that as well. So please share any feedback if you guys want me to take a look at anything, and otherwise I'll catch you guys later. See ya.